NVIDIA, the NASDAQ, the S&P, they're all rallying. Oh, wait a minute. Interest rates are over 5%. How could that be? Here, take a look. When you look at 2009, it was 0.08. That's pretty close to zero. And it stayed that way all the way up to January 2022. 13 years. Except for an occasion, it would go to 1.5. And when it did, the market would correct 15, 18%. They'd bring the interest rates back to zero right here. And they rallied up 40% again at 0.08. Now, we also have an inverted yield curve. Forget the inverted yield curve. Doesn't mean anything. Well, it does. Because only 3 times the yield curve has inverted 500 days. Now, think about that. For 500 days, just 3 times. Now, the first time the inverted yield curve was out there for 500 days was in 1929. Market dropped 90%. The next time the inverted yield curve went past 500 days was 1974. Oh, another crash, 45%. Another time the inverted yield curve went beyond 500 days, 2008. Oh my God, that's a 50% crash. And here we are now, today, 2024. And the inverted yield curve is over 500 days. But yet, the market keeps rallying at 5%. What are you, nuts? Now, they also tell us that they're going to have a soft landing. We're going to have a soft landing. How can you have a soft landing? That's absolutely insane. There's no way you're going to have a soft landing. It happened one time in 70 years, and everything's got to line up perfectly. The sun, the moon, the stars, everything. Not going to happen. You're not going to get a soft landing. That's a bunch of garbage. Now, understand, if the market is going up from 2009 to October 2022 at zero interest rates, it was driven by increasing the money supply from 8 trillion to nearly 22 trillion. And rates kept buying bonds and keeping the rates down. So how could it be that rates are at 5% now and the market continues to go up? Now, what do you do? You go to find an expert. We need an expert. And what better expert would that be than a guy by the name of Jared Bernstein? Now, who's Jared Bernstein? Well, Jared Bernstein is the economist, chief economist, and economic advisor to the President of the United States. He's got to be pretty bright. The other day, they asked him about all this money printing, getting at what I was getting at. Listen to what he had to say about the money printing and how it affects the stock market.
The government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do? There is no question that the government prints money, and then it uses that money to yeah, I guess I can't really talk. I don't get it.
He doesn't get it. He's the economist. He's the one who advises Biden. He's the one who advised the American Rescue Plan. He advised the Inflation Reduction Act. He advised the Omnibus Bill Plan. That was him. And by the way, think about this. The American COVID Rescue. We still are feeling that inflation today. The inflation from the American Rescue Plan is with us. It's persistent. It's hard to get rid of. Because remember, we were already in bad shape, suffering from inflation before that plan. And when they put that plan in, they gave everybody in the family $1,400, moratorium on house payments, car payments, rent payments. All of a sudden, people had all this money. Savings went from 8% to 32%. They didn't have to pay anything. And they went out and spent like crazy. But the factories couldn't produce fast enough. And prices went up. And that's where we got tremendous inflation. And we still can't get rid of that inflation. And yet, they raised rates to 5%. To fight that inflation, and the market's going up instead of down. How long is that going to work? Well, let's think about it. The national debt has increased 385% from 2008 to 2024. Interest, 157%. Deficits, 340%. That's pretty bad. Oh, and our GDP, our debt to growth is so upside down. Should be about 65%, the ratio of debt to growth. Our ratio of debt to our economic growth is 124%. So we have small businesses in the worst shape in 20 years. We have corporate profits dropping. They're dropping about 30% because interest rates are no longer at zero. The rates are at 5, and then they add on 2 points, 3 points. They're paid as much as 7%. So how can the market keep going up? It's because, again, every time the market drops, they crease more money, print more money, shove it into the market. How do they do that? They take the money that's printed, they give it to the big investment banks, mostly J.P. Morgan. And J.P. Morgan goes and buys stocks. Here, let me show you something. In the last week, this was insane. As the market was rolling over, obviously it was going to roll over because interest rates no longer at zero. We started to roll over here in April 1st. By April 10th, I knew that our economic GDP was going to be brutal. So on the 10th, he came out with a statement. He's going to cut rates. What? When was the last time that a president came out and said that he's going to cut rates? We never heard that. I never heard that before.
Well, I do stand by my prediction that before the year is out, there'll be a rate cut. This may delay it a month or so. I'm not sure of that. We don't know what the Fed is going to do for certain.
But no president does that. Why'd he do that? Because he knew what was coming. He knew the GDP number was reporting on 25th of April. And what happened? The market dropped 500 points. Then right after that, we had more inflation, terrible inflation. And the market dropped 700 points. The first time they created a couple of stories to move the market up, to get off that bottom after it went down 500 points. But it wasn't the stories. The stories created the movement of the market, but it was printing more money, put more money into the market. Every time the market goes down, they want to go back up. The plunger team comes in, puts more money in. Same thing here. When they had the 700-point drop, what happens? Apple comes up. Their earnings weren't that great, not like the old days. So what they do? The CEO of Apple, which is a very loyal Democrat, very close to the Biden, all of a sudden makes an announcement. They're going to purchase $110 billion of their own share. Why didn't they do that before? Why did they make that announcement right after we get the terrible GDP number, the terrible inflation number, and all of a sudden they move their stock up? It shoots straight up. Apple, big move. But wait a minute. The problem's still here. We still have high rates. And more than that, we have price inflation. We had the biggest gain in prices in 1 year. Just to give you an example, electricity, for God's sakes, under Trump was up 5% over 4 years. Under Biden, from the first day he was in office to today, it's up 30%. This is insane. Saving went from 33% now down to about 2%. Credit card defaults, 30, 60, 90 days. All categories. Used to be just one. Autos, default. Small businesses. Their confidence has been down the lowest in 12 years. There's no good news anywhere, but the market keeps rallying. It's not going to rally for long. They're going to take this market and they're going to try to keep rallying it. And what's going to happen eventually is the market is just not going to be able to hold. I mean, there's just too much inflation. There's too much interest rates. I mean, after all, think about it. They kept interest rates for 13 to 15 years at zero to rally the market, 650% in the S&P, 1,200% in the NASDAQ, and now all of a sudden that doesn't matter. We keep going up at 5%. No, it doesn't work that way. So understand, when this market takes out this low right here in the S&P, and that's what they're protecting. They're protecting that low of Friday, April 19th. When it takes that low out, everything's going to just fall apart. It is. It really is. It's important to be in the right stocks when you have an environment like this. And that's what we've done here at Phil's Gang. We mentored our members in gold, up 15 to 20%. We mentored them into oil. We had them buy oil, up 15 to 20%. And we'd love to mentor you because you can't continue to just buy stocks. 80 to 90% of retail customers lose money because all they do is buy stocks. And when the market goes down, they get killed. We'll mentor you in shorting stocks. We don't just give you picks. We mentor you. That's a big difference. Now, I'm going to leave, and I'm going to play the whole clip of Jared Bernstein. That should give you some real comfort when you go to bed at night. By the way, do me a favor. Hit subscribe and like. I'd really appreciate it. Remember, Phil's Game. Check it out. It's free for 10 days. Here you go.
The government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do? There is no question that the government prints money, and then it uses that money to yeah, I guess I can't really talk. I don't get it. I don't know what they're talking about. Like, because it's like the government clearly prints money. It does it all the time, and it clearly borrows. Otherwise, we wouldn't be having this debt and deficit conversation. So I don't think there's anything confusing there.
This is the guy who makes all the economic decisions. Join my gang, free for 10 days. See you on the chart.